Welcome to Explain the Charts, where we break down the latest market data and news for the savvy trader. Today is March 23rd, 2026, and we are taking an in-depth look at Litecoin, ticker symbol LTCUSD. The current narrative for Litecoin is a battle between institutional optimism and bearish technical structures. In the news today, reports from Invez have sparked concern with a forecast suggesting LTC risks a crash to the $30 level. This comes despite the historic approval and launch of the Canary Litecoin ETF, trading under symbol LTC on the Nasdaq. While the ETF launch in late 2025 was a milestone, net inflows have remained lower than initial projections, weighing on price action. However, it is not all gloom, as MEI Pharma recently committed over $100 million to a Litecoin treasury strategy. Furthermore, we are seeing signs of smart money accumulation, with large whales moving over 1 million LTC off exchanges recently. Coinbase has also expanded its services to include LTC as collateral for on-chain lending, increasing the asset's utility. Litecoin founder Charlie Lee has also been active in the media, discussing the relevance of LTC as digital silver in the current cycle. Development-wise, the network is stronger than ever with the MWB privacy layer reaching record usage levels. But the question remains, will these fundamentals eventually drive the price, or will the technical gravity pull us lower? Looking at the daily chart, we can see the broader context of Litecoin's struggle over the past year. Back in December 2024, LTC was trading near $130, but 2025 saw a persistent downward trend. The price found a significant floor around the $50 level earlier this year in February 2026. Specifically, if we zoom into the price action from early February, we see a dip to $45.06, followed by a sharp recovery. This bounce took us back toward $60, but we have failed to sustain any momentum above that psychological resistance. Currently, the daily candles are showing a series of lower highs, which is a classic bearish signal. The 24-hour range has narrowed significantly, suggesting a volatility squeeze is incoming. Traders are closely watching the $53 support level, which has acted as a temporary safety net over the last few sessions. If the daily close drops below $50, the bearish forecast of $30 starts to look much more realistic from a technical standpoint. On the volume side, we are seeing decreasing participation on the sell-offs, which sometimes precedes a reversal. Wait for a daily candle to close above $58 to confirm that the selling pressure is finally exhausting. Switching over to the 1-hour chart, we can see the localized struggle at the $57 resistance level. This level aligns perfectly with the news reports suggesting that $57 to $58 is the make-or-break zone for a bullish reversal. Every attempt to clear $57 throughout mid-March has been met with immediate selling pressure. The hourly VWP has been trending downward, and price is currently pinned below it, indicating a bearish short-term bias. Note the cluster of transactions around $54.50, which is acting as a magnetic zone for price action right now. We see several long wicks on the hourly candles near the $53.50 mark, showing that buyers are stepping in at these lows. The RSI on this time frame is showing a neutral reading near 48, giving no clear edge to bulls or bears currently. However, the MCD is showing a bearish crossover, warning of potential further downside in the coming hours. Correlation with Bitcoin remains high, as LTC seems to be waiting for a macro move from the market leader. If we lose the $53.30 level on an hourly basis, we should expect a quick retest of the $51 handle. Conversely, if the bulls can reclaim the $56 level, a run to $60 becomes the high probability target. Zooming in further to the 15-minute chart, we can see the high-frequency movements over the last 48 hours. There was a notable breakdown on March 21st where price fell from $55.60 down to a low of $53.03. Since that drop, we have been in a corrective phase, oscillating between $53.30 and $54.20. The 15-minute chart shows a series of dead cat bounces that are failing to reach higher levels. This indicates that the momentum is still firmly in the hands of the sellers for the immediate short term. Liquidity seems to be thinning out, which could lead to a sharp, volatile move once the range breaks. Look for a breakout above $54.50 to scalp along toward $56, but be wary of the heavy overhead supply. The most recent candles show a consolidation near the bottom of the range, which often resolves in a continuation of the trend. Watch the volume bars. Any spike on a move below $53 could trigger a cascade of stop-loss orders. For day traders, the current 15-minute structure is a wait-and-see zone until we clear the recent pivot high. To recap, our key support levels are $53.50, $51, and the macro must-hold level of $50. On the resistance side, we need to clear $57, $60, and eventually the $71 level to turn long-term bullish. My unbiased prediction is that we will continue to consolidate between $51 and $58 for the remainder of March. I believe a move to $100 is unlikely in the short term unless we see a massive surge in Canary ETF inflows. However, if we lose $50 on a weekly close, the probability of reaching the $30 bearish target increases to roughly 60%. Watch for news regarding the Litecoin Summit 2026 as a potential catalyst for a sentiment shift. Whale accumulation is a positive sign, but it needs to be met with retail interest to sustain a rally. Keep a close eye on the hidden bullish divergence on the weekly charts mentioned in recent technical reports. Thank you for watching Explain the Charts and staying informed on the LTCUSD market dynamics. Remember to like and subscribe for more in-depth analysis of the crypto markets. Finally, please be aware that this video is for educational purposes only and is not financial advice. Always perform your own thorough research and consult with a professional before making any investment decisions.